Hey there, future millionaires. Are you ready to embark on a journey that could change your financial future forever? Ever wonder how some people seem to make their money grow effortlessly? The answer is investing. It's not magic, it's a skill you can learn. Now, don't let that word scare you. Investing might sound intimidating, but it's actually quite accessible. Investing isn't just for Wall Street hotshots, it's for everyone, including you and me. This essay is your beginner's guide to the exciting world of investing. Think of it as your personal roadmap to financial success. We'll break down complex concepts into easy-to-understand bites. No jargon, just clear and simple explanations. Get ready to make your money work for you. Imagine your money growing while you sleep. Investing is all about making smart choices with your money. It's about putting your money to work in the best possible way. It's like planting a seed and watching it grow into a mighty tree. With time and care, your investments can flourish. Okay, maybe not a tree, but you get the idea. Your money can grow significantly over time. With the right knowledge and a little patience, you can watch your money grow too. It's all about making informed decisions. This essay will be your roadmap. We'll guide you through the basics and beyond. We'll explore different investment options, from stocks and bonds to mutual funds and real estate. Understand the relationship between risk and reward and how to balance them to suit your financial goals. And learn how to avoid common pitfalls. We'll show you the common mistakes to avoid and how to protect your investments. Get ready to take control of your financial future. It's time to make informed decisions and take charge of your money. By the end of this essay, you'll have a solid understanding of the basics of investing. You'll know where to start and what to look out for. You'll be equipped to start your investment journey with confidence. No more hesitation, just clear steps forward. So buckle up and let's dive into the world of investing. Together, we'll unlock the secrets to growing your wealth and securing your financial future. In the simplest terms, investing is like planting a money seed. Just as a seed needs water, sunlight, and time to grow into a plant, your money needs the right conditions to grow. You take a portion of your money and put it into something with the hope that it will grow over time. This could be anything from stocks and bonds to real estate and mutual funds. Think of it like this. Instead of letting your money sit idle in a savings account, you're putting it to work for you. When money sits idle, it doesn't grow, but when you invest, you give it the potential to increase in value. You're buying a piece of something that you believe will increase in value. This could be a share of a company, a piece of real estate, or even a commodity like gold. This something could be a company, real estate, or even a precious metal. Each type of investment has its own risks and rewards, and it's important to understand them before you invest. Let's say you buy a single share of stock in a company that makes delicious cookies. By doing so, you're not just buying a piece of paper, you're buying a piece of the company's future. You're now a part owner of that cookie company. This means you have a stake in its success and potentially its profits. If the company does well and sells a lot of cookies, the value of your share might go up. This increase in value is what makes your investment grow. That means your initial investment has grown. Over time, this growth can compound, leading to even greater returns. Investing isn't about getting rich quick. It's a long-term strategy that requires patience and discipline. It's about making your money work for you over the long term. By consistently investing and allowing your investments to grow, you can build significant wealth over time. It's about patience, consistency, and making informed decisions. Regularly reviewing your investments and staying informed about market trends can help you make better choices. And guess what? You don't need to be a financial expert to get started. There are plenty of resources and tools available to help you learn and make informed decisions. Remember, investing is a marathon, not a sprint. It's about staying the course and not getting discouraged by short-term fluctuations. By starting early and staying committed, you're setting yourself up for a brighter financial future. The earlier you start, the more time your money has to grow. Now that you understand what investing is all about, let's explore the different avenues you can invest in. From stocks and bonds to real estate and commodities, the options are vast and varied. Each has its own set of benefits and risks. So it's important to do your research and choose the ones that align with your financial goals. Now that you're familiar with the concept of investing, let's dive deeper into some popular investment options that can help you grow your wealth over time. Remember those delicious cookies we talked about? Buying a share of that cookie company is called investing in stocks. Stocks represent ownership in a company, and when the company does well, the value of your shares can increase. When you buy stock, you're buying a tiny piece of ownership in that company. This means you can benefit from the company's growth and profits. But wait, there's more to explore in the world of investments. Imagine lending money to the cookie company and they promise to pay you back with a little extra on top. That's called investing in bonds. Bonds are essentially loans that you give to companies or even the government, and in return, they pay you interest over time. Bonds are like loans that you give to companies or even the government. They are generally considered safer than stocks because they provide regular interest payments and return your principal at maturity. Now, let's say you're not ready to pick and choose individual stocks or bonds. It can be overwhelming to decide which specific investments to make. That's where mutual funds come in. Mutual funds pool money from many investors to buy a diversified portfolio of stocks, bonds, or other securities. Imagine a basket filled with different stocks and bonds. That's what a mutual fund is. It allows you to invest in a variety of assets with a single purchase, spreading your risk and making it easier to manage your investments. It allows you to invest in a variety of assets with a single purchase, spreading your risk. This diversification can help protect your investment from the ups and downs of the market. Last but not least, is real estate. Real estate investing involves purchasing property to generate income or profit. Remember that dream house you've always wanted? Buying a property and renting it out is a classic example of real estate investing. You can earn rental income and potentially benefit from the property's value increasing over time. You earn rental income and potentially benefit from the property's value increasing over time. Real estate can be a tangible and rewarding investment, providing both income and long-term appreciation. These are just a few examples of the many investment options available. Each type of investment has its own risks and rewards, and it's important to understand them before making any decisions. The key is to find investments that align with your financial goals, risk tolerance, and time horizon. By carefully considering your options and seeking professional advice, you can build a diversified portfolio that helps you achieve your financial objectives. Here's a universal truth about investing. The higher the potential reward, the higher the risk involved. Think of it like a roller coaster. The tallest, fastest roller coasters might give you the biggest thrill, but they also come with a higher chance of making your stomach do flips. Similarly, investments with the potential for high returns, like individual stocks, can be more volatile. Their value can go up and down quickly. On the other hand, investments like bonds are generally considered safer, but may offer lower returns. Imagine a scale. On one side, you have low-risk, low-reward investments like bonds. On the other side, you have high-risk, high-reward investments like stocks. Finding the right balance for you depends on your risk appetite and investment goals. Remember, diversification is your friend. Just like you wouldn't put all your eggs in one basket, you shouldn't put all your money into a single investment. Spread your investments across different asset classes to manage risk effectively.